Thank you very much. Ladies and gentlemen, welcome back from lunch. This panel discussion is about innovation in retail banking. We're going to be looking at three base topics around what the future of retail banking looks like, the role of the branch within this new digital age, and how can we meet future customer needs given all of the change that's taking place in our industry at the moment. I'm delighted to have this august panel of experts here to be answering some of the questions. We're going to go through a number of them. As said, if you do have any questions, please wait till the end. But hopefully the discussions that we will have based around this subject will be very, very useful and interesting. Without further ado, I'm going to ask my panel the first question, and that's around mobile banking. And what does the future of mobile banking look like with high levels of internet penetration, smartphone usage, and growing millennial population? Maybe I could ask Dinesh to answer that first.
Okay. Good afternoon, everyone. I think the mobile technology development is there to stay, and we are already seeing significant development in the mobile banking front. Most banks, including ours, are using mobile first as the key priority going forward. And I think going forward, there are 4 or 5 things that will impact the development of this technology. The first is the cybersecurity itself. I think there are concerns in some people's mind about the security that a mobile banking app provides. I think they are getting more and more addressed as we talk through multiple other authentication measures like biometric authentication. The second development that you're going to see on the mobile front will be the mobile apps will become more and more artificial intelligence driven through chat interface, and I know Emirates and MEBIS, my colleagues, have already launched something in the direction. There are going to be the third element that you will see coming in that area will be on voice payments, and we are already seeing some developments in that space. The apps will become voice enabled, voice driven, as well as voice instruction driven, to the points that consumer may not even have to even open the app, and you can do it banking on the go. And the last piece on mobile from my perspective is that I think to succeed in that space, we have to be a part of the ecosystem in the market. So I know in UAE the ecosystem is developing, but if you look at markets across the globe, whether it's China, whether it's Singapore, whether it's Thailand, if you are not a part of the ecosystem in the market, like WeChat in China that has 600 million customers into WeChat. So if you're not a part of the integrated ecosystem within WeChat, a standalone mobile application is unlikely to succeed in the medium to long term.
Okay, great, thank you. Mufaddal.
Yes. Well, I'd like to just talk about the fact that the mobile banking piece is always in conflict with, say, the wallet. Right? You also have a wallet standalone, and then you have a bank mobile banking. The question is, how do we integrate the two? There are multiple mobile wallet providers. Now, do they graduate to providing all the banking services, or does the bank say that I will integrate the wallet within the mobile banking app? So that's a question most of the banks are working along. And we also have a lot of these standalone mobile wallet providers like Samsung Pay, Apple Pay, Paytm in India. We've also moved on to, so a lot of services are being added to it to make it wholesome and useful. The other element I would like to talk about is the acquisition part, that we'd like to see a lot of acquisition happening through mobile banking in terms of NTB customers. So it just shouldn't be a channel for usage of banking services post, but it reduces the acquisition cost to a large extent. And we have a whole process where the application form, the assessment of the customer, and the customer being given that credit right over there. That is going to change quite a bit. It's going to bring down the cost of retail banking to a large extent. And I believe that is the new future as far as acquisition is concerned.
Thank you. Philip.
Yes, clearly it's one of the most exciting and fastest developing technologies we're seeing in banking at the moment, and I agree with my colleagues. I'd like to set my thoughts, my answer to this question a little bit from what we're seeing in Adib that seems to be occurring with the consumers, and I think this is something that we've seen recently as a very interesting development. Clearly, you mentioned at the beginning the smartphone penetration here is extremely high. It's around 78%, the highest in the MENA region. So it's normal that our consumers are interacting with us through mobile. 67% of our transactions go through digital platforms, predominantly the mobile and the online apps and ATMs. And we've seen a rapid increase year on year in mobile transactions by over 50%. But we've similarly not seen a similar decline on the branch transactions. Branch traffic still seems to be very high. I think it's less than 10% the branch interaction that we're, in terms of a decrease year on year, in terms of branch interaction with us. So I think the mobile technology is clearly accelerating at a pace, but the consumers are telling us that they still want to go to our branches. They still like the human touch. And what I want to share is that I think the consumers are beginning to develop into almost like a hybrid model, where the touch with the bank, the touch points with the bank are increasing, their interactions with the bank are increasing, but they're not decreasing across channels to the same amount. And I think this hybrid version is something we will see develop in the UAE for a while. As technology increases, they will have further interactions and opportunities to interact via the digital platforms, but the human touch is still important. The physical presence of branch networks still seems to be important. The sales interaction through these channels are very, very important. And I think that is something that we will see for a few years to come. And the consumers are telling us, we want everything digital, but we also want a bank that has lots of branches and ATMs. So I think on the retail front, if we're worried about our cost-income ratios, we should start thinking along these lines as well.
Okay. That kind of links us into the second question quite nicely. In terms of branches, and to your point about people looking for both mobile solutions and branch and ATM networks, so you think there's actually quite a strong future for mobile, for branches in the future. Do you see that as being some sort of level of differentiation so that high net worth individuals could make use of branches much more than maybe the ubiquitous level which is more focused on the mobile banking sector?
Is a question to me? Yeah, I'd love to carry on that. I think absolutely right. What we're seeing is a change in branch format. As I mentioned, the mobile is increasing in its interaction with the clients, but they still want to come along to branches, but not necessarily the same type of branch that we've always had in the past. So we've launched a complementary offering, let's say on our digital side, which is Adib Express, where you can start your journey from home by booking an appointment, go along to our digital branch, interact with humans there. It's not just a bunch of digital machines. You can actually meet humans. You can have all of the digital interactions you want and take advantage of digital offerings to take instant personal finance, instantly open an account and walk away with your checkbook and debit card printed on the spot. You'll be surrounded by digital technology. You'll have media walls, you'll have interactive streams, you'll have video chats, but you'll be walked through this if need be with relationship managers. That, I think, is a model that clearly we're seeing develop, and it's what people want. They don't just want, at least our consumers are telling us, digital interactions. They want that plus, and the plus is usually the human interaction and the ability to go through your digital or online transactions with guidance and advice and support.
Thank you. Sanjay, is that what you're seeing from your perspective at Dubai Islamic Bank?
Pretty much so. Like, see, what the mobile banking has, or what the mobile has done is that it has given some kind of the convenience to the customer, which is kind of unparalleled. It gives you the accessibility, it gives you the convenience. So what is it making redundant? You know, a lot of things are being duplicated. People still want to go to the branch, people still want to meet people. But what is happening is that the information which you typically wanted from the call center, has my salary been credited? You know, which is still probably the single largest query, you know, we receive at our call centers. What's my balance? You know, all these things can be easily today done on the mobile phone. So very clearly, if we see like the emerging trend, the branches are not going to go away. The branches are pretty much going to be there. The model of a branch is going to be different. The experience in the branch is going to be digital. And when we talk of digital, it's not only, you know, a mobile phone, and it is not only about, you know, some fancy equipment. The way we want to look at it is that, are we making the life of the customer simpler? Are we basically enhancing our processes? Are we trying to do the things in one day, which initially used to take 3 days? Can we do an instant account opening? Can I give him a checkbook? Can I give him a credit card on the spot? So digitization is cutting across not only the mobile phone, but all the touch points which the customer is today, you know, coming to. And the casualty of that, in our personal opinion, is going to be the call center. Because people are sick of waiting on the phone for 10 minutes to speak to an agent. And if they can get the information very similar, you know, quickly on the mobile phone, that's where we will, where I personally feel that the trend is going to shift.
Thank you. Subroto, your view, please.
See, first, the mobile phones have changed enormously in the last couple of years. And I think in the beginning, we were trying to migrate banking as it was done on the mobile phone. And I think today time has come where the mobile phone or the mobile banking brings in new form of banking and experiences that were not present earlier. That's the first point. The second, what mobile technology allows is enormous and huge amounts of things. What is limiting is the customer adoption, and customer, particularly in the adoption, about unknown technology, being scared about it, frauds and other stuff. So that's the impediment. But I want to talk about two things here. One, what is possible through mobile banking is not possible in normal banking, and that is what will emerge. I'll give you an example. You have a credit card, suppose you have lost it. You want to block it. In the non-mobile banking space, you have to call the call center, you have to cancel the card, and the card is gone forever, and you have to wait for the replacement card. With a card control, you can actually block the card on the mobile phone, so the card cannot be used. You try and search for the card. If you find the card, unblock the card. This is an example of an experience that does not exist in the normal world, which becomes possible through mobile banking because it's a person-to-institutional connection and highly personalized. However, mobile banking is bringing lots of new features, but the limiting factor is it has to connect ultimately with the bank's legacy system. And that's the point about the ecosystem. As more ecosystems emerge, my belief is banking will change significantly. It's not that the normal banking will get done, and that will take us to the next question. I'm not so sure if branches will be necessary. There will be some interaction that will be necessary, but mobile banking brings about a new way of doing banking. Wallets, payments, query resolution, how you interact with the bank, how you order things, how you get stuff, and banking will get embedded in many of the other transactions that we do today. So it's going to actually change banking if it hasn't changed, and I think most of us underestimate its impact and what value and amount of change it will bring to banking. So we are very excited about it.
Suva, with your role across both retail banking, private banking and wealth management, do you see the role of the branch changing, evolving within your organization?
Yeah, totally. I think, like Som said, I agree fully. The nature of banking itself is changing absolutely amazingly in the last, I would say, 5 years. And I think in certain ways we are at a cusp of 3 different waves in this country. One is the fact that we talked about, the smartphone penetration being 80% or close to 80%. The second is the fact that you have 2.4 million millennials in this country who probably pick up their mobile phone, last count, 160 times a day, right? And the third is the ecosystem. I think the government initiative of UAE and Dubai government specifically is a big factor pushing all institutions, including banks, to adopt mobile and move to much more mobile services. I think if I just look at my own bank, we have 1 million plus customers. 20% of them only use mobile banking for all transactions. That's 200,000 customers who don't use any other channel. I have half the customers who use mobile, online, ATM, call center, all of the digital channels. But I have to get rid of the 20% who will never step into the branch, who will never call the call center. So it's a very important segment for me. So mobile first is something that increasingly banks will have to adopt. And the point that I think Sanjay made earlier is that you can't force fit existing processes and systems into the mobile bank. You have to think through everything ground up, because the whole fulfillment, the whole onboarding on a mobile is very different. And it sometimes can be so different that we decided to form a separate bank, which is Live, which is entirely mobile. It has no other, it's a mobile only bank, not a mobile first bank. And there we have to really think through how would you deal with the customer if you don't have a call center? How do you deal with the customer if there's no paper? So, it challenges us bankers who are used to, 20, 30 years of doing things in a certain way, to think how will the new world work without paper, without call center, without people walking in. So I think it is in a way redefining banking, like it has never done before. I think it's doing to banking what probably ATMs did back in the late 60s. And I think this decade we'll see, and we've still got 4 more years to go, and we just had the iPhone launch with facial recognition, right? So we'll redefine how we bankers look at banking with biometrics embedded into banking.
Also, I think to add to Shubha's point and Som's point, I think we all have to recognize that whether we like it or not, going forward over a period of time, anybody who has a banking license, good technology and a lot of marketing budget, you're on the same platform with somebody having 50 branches, 100 branches or 10 branches. And we also need to move away from the concept of a walled branch, because technically if you have a representative who on an iPad can do any banking requirement for you in your office, in your premises, in your canteen area, technically it's a branch. Other than the cash, everything else is available and the technology is there. So if you have 300 salespeople and 300 salespeople are in the market, you can technically have 300 branches as well, because there's nothing that you can't do through that iPad as long as your backend technology is integrated other than the cash transaction. On that as well, you have virtual teller assist. I know ENBD has launched virtual teller assist. We have as well, not in UAE but in other markets. So I think that concept is going to continue to fundamentally evolve. So whatever we may call branch, it may be an experience center like an Apple or a Nike showroom, which are more experience centers. They're not really, they're not doing proactive selling. Or they could be a smart kiosk in one of the malls, or it could be a guy walking with an iPad doing any transaction.
Okay, thank you.
I'd just like to make a point about the segments that actually use mobile banking. We are quite active into the WPS segment with a tie-up with an entity called C3. And to our utter surprise, we realized that about 40 to 45% of the labor force that works in this country, which gets paid through the WPS, use a lot of mobile applications. So our partner has made its own app, and we have gone ahead and provided the consumers ability to try and remit through the app directly. And to a very surprise, we realized that many of them are more comfortable using the app to do a direct remittance rather than go and stand in an exchange house. They're able to get the beneficiary registered, get the KYC done over there for themselves, and also at the same time engage into a remittance transaction which is providing as good rates as the exchange houses and the same fees. So there's a lot of uptake that's happened, and there are many other transactions which they do. Top up for the mobile within the country, outside the country, and there is now being plans to try and build in a wallet in us there, because the card is embedded in there. So then you could also start using it for your POS payments or even for your e-commerce transactions. So it's across the board. It's not just the millennials who are quite excited about it, but there's also a workforce which also feels quite attracted towards it.
See, I have a slightly different take on this. See, when you look at, banking today, there are three elements to it. There is the deposits, there's the transactions, and there's lending. I mean, that's basically what constitutes a bank. Now, if you talk of deposits, that needs a branch, that needs physical presence. If you talk of lending, but for the, very, very simple lending can be done probably on the mobile phone, but any complex structure still needs a human interaction. What will evolve and what is evolving is the transaction space. You have 1,000 dirhams, how you want to spend them. You earlier had cash, now you have a wallet, you could do your transaction online. So the transactional space is evolving, and that is evolving at a very, very fast pace. And for that, the role of a branch or the role of any other channel is definitely going to diminish. But if somebody has $1 million, will you put it on the mobile wallet? I personally don't think we are ready for that as yet. There's too much, as Dinesh alluded in the beginning, legislation, security, concerns, still exist. And they continue to exist on the lending side, where people need a bit of personalization, people need to interact with a human being, and get to, agree on the terms and conditions, because nobody reads, because the terms and conditions in the banking system can be pretty daunting, and you don't really, how many times we download an app and we say, do you agree? We just press agree. So there are no disclosures there. So the transactional space will evolve, but I think the other two will still lag behind for some time.
I think the real challenge for retail bankers at the moment is the pace of change, the reaction of consumers to that pace of change, and moving just fast enough to take everyone with us and make sure that we digitize the things that are relevant to consumers, we digitize according to our brand values, and we digitize seamlessly in the branch environment. As we've said, the high transaction value items will still be conducted in a branch. It's happening in other countries that have digitized even before the UAE. That will continue to move apace. So it's the seamless interaction of digital with human intervention that I think is what we need to achieve, and the pace of change there, we need to make sure we're with it and taking our consumers with us.
I'm going to move on now and talk about, if you like, the rise of fintech technology and the number of startups that are coming into this market, and using very innovative technologies. How can banks make sure that they also are able to use these innovative technologies in a way that they can actually execute into services for their clients? And will they be able to meet the changing needs of their banking clients, or will potentially fintechs come and be a serious competition in the future? Dinesh, would you like to?
Yeah, okay. I do believe that at this point of time, on a medium to long range, fintech needs banks as much as banks need them. Partly because fintechs have taken vertical slices out of profit pools of multiple banks and have built apps around them. But to be able to make it scalable for customers to trust them, to be able to use that vertical silo has proven to be difficult. So there are a few examples of success, but there are multiple examples of failure as well. And you will find more and more fintech companies now wanting to partner with banks to be able to integrate their APIs, to be able to leverage both ecosystems. And that's happening as we speak. We have, as a bank, we have got multiple API integrations, whether it's the mobile taxi app, whether it's a Zomato app, or any of the other apps. And even the fintechs, you have a SyncSaver, which is similar to some of the some of the fintech aggregators in this market. And I think so that integration is happening. I think the threat that banks have more, from my perspective, is not from fintech companies, but from technology giants. Your Google and Amazon and Facebooks of the world. Because today, all the banks are leveraging their ecosystem, and you're getting inside. Either you're using a Facebook Messenger, or you're using a cloud computing from Amazon, or any of these features. Now, at this point of time, it's a happy marriage for everybody. But over a period of time, this marriage can get sour depending upon what their ambitions are. And we have to realize that if their ambitions will change, obviously, and over a period of time, it can create them to be able to get into this field and get in heavily. Once I was attending a meeting, and we had a question to one of the Google head for Asia, and we asked him the similar question, and his answer was that Google will only look at something if they can build it up to a minimum 1 billion customers. So the day they figure out they can get a 1 billion customer, they'll get into that. Less than that, they said, doesn't matter to us. We don't develop anything that's going to get less than 1 billion. So, yes.
Let's say, as far as fintech is concerned, we have an option of fintechs coming and partnering with banks, but when they do that, there is an intermediation cost. And as more and more fintechs come in and take that space, we lose our revenues. We need to share with them. So the better way, as I heard Suo say earlier, was why can't the bank themselves become fintech? To build that technology, go out over there and take that space. Many a time what happens is, because of the lethargy that large banks exhibit, they are not able to build that technology and get there. Classic cases in many countries, if you see. Right? Paytm in India, they went in because banks were not active in that space. Right? You go to many other countries, you see M-Pesa, that happened in Kenya. That was one of the prime example. In Nigeria, that's happened. So I think banks are essentially should put in decent amounts of capital into technology, get themselves to do it, stop partnering. You need to partner. I don't say no. There are partners. You have Apple Pay, you have Samsung Pay, you're partnering with them. But the reality is, if you partner more and more with fintech, you will tend to not only lose the revenue initially, but even that customer. So that's an element that we need to be careful about when it comes to fintech.
Philip.
Yeah, I think if you're a bank that embraces partnerships to grow your business, the opportunity of partnering with fintechs is a wonderful opportunity. And if you look at the amount of money that's been put from private equity and various other investors, venture capitalists into the fintech industry, I think the last decade it's over $50 billion. So there's clearly a lot of money that's been put into these startups. The challenge for banks will be selecting among the hundreds of partners out there, the ones that are right for you, the ones that can really add value. But clearly they give you a chance to kickstart and get ahead, make some progress in areas which your personal, let's say, or your institutional DNA may not be best suited to achieve on its own. If I can share an experience from our digital strategy, we decided a few years back that we needed to partner. We're an Islamic bank, we're quite successful in what we were doing, but in order to move into the digital space, we struck a partnership with Fidor, which is a European fintech, and they had a wonderful proposition, which was to build an online community. that would then lead into banking and mobile apps. And this was for us an opportunity to be the first Islamic digital bank, launched the first first community in the MENA region certainly, and start moving into the digital space where otherwise on our own it would have taken us several more years to build. So I think fintechs are an exciting opportunity for banks that wish to embrace partnerships as an element of their growth.
Sanjay.
See what, fintechs are nice, fintechs are essential. But what essentially is happening is that we are creating two banking systems within a bank. There's a digital bank and there's a conventional bank. And somewhere they both got to, merge together. If fintech is forming a layer, why is fintech important? Why are banks going for fintech? Because traditionally, if you look at the banking processes and banking systems, you have a legacy, your core banking system, you have a loan origination system, you typically have a card system. And if you want to onboard a customer, it's a series of workflows you have to navigate through. I'm sure all the CIOs and COOs out here know what I'm talking about. That the number of integrations, the number of processes you need to manage, the whole process becomes pretty cumbersome and it takes sometimes 2 to 3 days. What fintech is typically doing today is it's putting a layer on top and bypassing some of your normal workflow challenges and giving you an elegant solution, right? But it is still not changing the core of how you are working. And to change the core of how you are working, you basically need to make sure that your legacy systems, whether it's your core banking, your loan origination, you put a layer on top and achieve that elegant workflow. Once you've achieved that, putting an app on top of that and saying navigate it through is going to be much simpler. So there will be a convergence and there has to be a convergence moving forward.
I think, we all know that within banking, retail banking is very technology heavy. But I'll probably say that in today's world, a retail bank is as much a technology company as any other institution, number one. Number two, I think fintech is the best thing that happened to retail banking and is the one that will drive its future, which will make it more customer-centric. And 2 or 3 things it will drive. One is an omni-channel experience, which is the biggest challenge of a bank, that you have multiple channels, whether branch, call center, a DST agent, an RM, and the information flow between the customer interaction and those channels is the biggest challenge the bank faces. The second challenge is the customer is asked to give his authentication of information at every time he interacts, and it's not a seamless experience. With the help of technology, you are going to address both of these. And I think fintech is driving this cultural change that Sanjay was talking about. But the bigger thing is, I think banking will not exist as we see banks today. So Sanjay talked about there is deposit, there is lending, there is transactions, there's also wealth management. I don't see in a foreseeable future all of them to be in one institution. The only force that's keeping us together is probably regulatory, the way they look at things. Banking could get disintermediated or could get into separate areas where those activities will be done in a different way. So it's not that the fintech is attacking it in a particular vertical. It's because that's the way the customer experience demands. And I think banking will get split to be done in different entities, and fintech will drive this change. So in my mind, fintech is the best thing that happened to retail banking. I think which will drive the change, which will be more customer-centric, and will make the process more efficient, and will make it more beneficial to the customer and to the industry as a whole. Yeah. It's a great thing to happen.
And Suva, would you agree with that?
If you can't beat them, you join them is what I believe. And I think, bankers are like that old obese guy who's going to the gym and watching this young fit man on the next treadmill pumping away, right? And you think, I want to be like that boy. And I need a trainer who can help me become like that boy, right? So all of us need trainers. And I think one of the things that has happened in the last 5 years is we realize we're obese and we need a deep physical workout to become like the guy next door. Otherwise, I'll get whipped every single day. So while fintechs haven't taken over banking, and I don't think they ever will, they've driven us to a level, I think the best thing that's happened to banking. I agree with Som. They have now made us far more conscious of what we lacked in the past, which is the speed, the culture, the will to integrate different systems. It's pushed us to being far more efficient. And that's the best thing. I don't think, especially in this region, any fintech is threatening. I don't wake up in the morning and think, oh my God, my revenue line is going to go down tomorrow morning. That's not happened yet. That might happen maybe 5-10 years from now. But what it definitely does is gives me opportunity to collaborate with smarter brains out there and try and improve my own products for my own customers. And I think all of us are looking at that. I mean, we have a construct called Future Lab, which is essentially working not just with fintech, also with big tech, so with the SAPs of the world and IBMs of the world, to try and think through solutions which we haven't thought through ourselves. And we have to understand, as bankers, we don't have all the answers. We'll never have all the answers. And I think we need people out there to help us, whether it's crowdsourcing, whether it's fintech or big tech, to come together and think of solutions which will go across different systems in different verticals. And the point Sanjay made, I think we know this better than maybe many others because we are a merger of two banks. And we have archaic systems that go back 20, 30, 40 years. And for us to create a digital experience at the front end, I can put a layer on top and try and pretend I'm fast, but unless I change the back end, it'll catch up with me. So one of the things that we are doing is actually working on a $1 billion transformation plan, primarily at the back end, not the front end, to try and look at systems afresh and see what will make sense to provide a digital experience to customers in the future, and not just band-aid through, to create an illusion of a fast process. And I think all banks have this issue, older banks more so, and I think that's something that we have to tackle at some point. And it's not easy, it's not cheap, is the point I would make.
I think it's interesting. I think the consensus here is that a lot of fintechs will be looking to partner with banks rather than compete. I think it's also very true from a regulation perspective. Do these organizations that if they continue to compete with banks, eventually will be governed and have oversight alongside banks in a similar sort of strict way? Would they, as organizations that pride themselves being nimble, actually want to submit to that level of regulation? So I think this cooperation partnership model is something that's going to develop very much so. Moving on, we're going to talk about digital payments and the increase in popularity last year. And it doesn't show any signs of slowing down. Launch of mobile wallets has led to the evolution of digital payments, biometric payment technologies, ultra-secure technologies in order to make things safe. Is this the next big thing in digital disruption, or is this just an evolution of what we've been seeing already?
Okay. I think on digital payments, it's a question of what is the form that you're looking at. There's a digital wallet and there's a biometric solution that will come through going forward. My belief, and maybe not fully correct, will be that I think biometric voice-enabled payment services will far outweigh the wallets that we are talking about today, which are in existence. Not that the wallets are not successful. I think some of them are not very successful. But end of the day, I think the go-forward consumer preference will be driven by biometric. It gives more authentication to customer, gives more peace of mind on both sides, and the transactions are more seamless. And you've already seen a lot of investments happening in the direction. iPhone X is one such launch that just happened. I know MasterCard and Samsung have worked through some of the voice-enabled payment processes and some of these things that you see through. I think it's a matter of time when we will get into a voice authentication and voice payment processing as a go-forward approach is what I would think.
Okay.
Well, I'll talk a little bit about the ecosystem. Now, if the digital wallet is to succeed, we need to build the ecosystem in and around in order to accept the payments. You see, in this country, as an example, in 2007, ADC we had launched the contactless card. But till today, it has not been successful. Contactless is a technology. Now, how different is it from tapping your wallet, tapping your phone in front of a POS terminal compared to the card? In Australia, the banks were able to contest with Apple saying that I will not be willing to pay because contactless was so predominant over there. And people didn't find a different experience tapping the card or just tapping the wallet. Plus, there are lots and lots of many newbies coming in, providing the wallet services. It's going to be a lot more cluttered. But eventually, they're all going to settle down, and the wallet that is going to provide you multiple services and keep you engaged is the only one that's going to survive. Now, with that going to be the bank's own wallet, every bank having their own wallet, or the country having a wallet of itself, or a GCC wallet, we never know that. Now, that's still evolving. Or else, you have partners like Google, with the Android Pay coming in, or the Apple Pay or the Samsung Pay, are they getting into finance by becoming banks themselves? Or else you could also have Etisalat and you coming in as telecom providers saying that I would try to enter the space. And that's happened in Korea with K-Bank being formed by the telecom operators over there. So that's another threat we see. So we do not know the space as of now today, but a lot of exciting changes would happen over the next decade on this.
Okay. Okay. I think we have time for one more question. I'm going to
No, I'll just react to what Mufaddal just said. You know, digital wallet is a reality today, you know, and I can share this with you that some of the major UAE banks, around 16 of them, have actually joined hands together to launch a wallet. The company is a reality, the work is on, and very soon you will be seeing the actual launch of a digital wallet. So, you know, it's pretty much happening.
Okay. Good.
The only point, the only part I would say is, spare a thought for the poor consumer. He's got to, he or she has to contend with Samsung Pay, Apple Pay, soon coming the Emirates digital wallet. You can think of Google Pay in the future. There's Beam, and there's multiple other wallets. If you're a consumer at the front end and there's a queue behind you, you got to think of what do I invoke now? Should I press my thumb? Should I speak to it? Should I look at a picture and launch my wallet while the poor cashier is clustered behind the counter? It is, there's we shake out in the future, right? You cannot expect a consumer to grapple with 6 different wallets on his or her phone, deciding how to pay. And I think we are just complicating, you know, matters further by launching wallet after wallet after wallet. Where in a country where 22% or whatever, less than 20% is actually carded, 80% is still cash, right? So I think we should have to contain expectations, given the Apple Pay experience in the US, which hasn't shaken the US, right? It's been there for what, 4 or 5 years now? It hasn't changed behavior in a significant way. I think this will take time for adoption, even in this market. That's my view.
Can I just add one thing? I think payment space is where you have seen the biggest impact of technology and the biggest impact of fintech, and more easily seen by common people or common consumers. And 2 things are driving this. One, it actually is bringing the customer experience much better. That's one. And second, it's actually giving value to the consumer where transactional costs that he used to pay earlier are dropping dramatically, whether it's remittance, payments, and other things. Those 2 will drive and will address all the concerns that my colleagues have mentioned, which is adoption, which is multiplicity, different ecosystems, they will happen. But the thing that is driving this is, it really improves customer experience and it really drops customers' price that he pays. The challenge for the financial community is that where is the revenue model in that? Revenue directly from payments is disappearing and you'll have to create other ways to make money. That's the challenge. But it's a reality, and I think while Apple Pay and the others have not shaken up, but the move to those wallets are increasing at an amazing pace. Many transactions are happening today on a digital way, and it will not change overnight, but this is a reality, and I think is the best answer of making economies cashless. And that is going to be a reality, and there are countries who are setting targets by which they are going to get cashless. Many of the Nordic countries have already gone to a fair amount of 95-96% cashless.
All right. So that leads us very nicely on to the final question, and then after that I think we've got a couple of minutes for questions. Is it customer experience or digital innovation which is the top strategy for your banks at the moment? And whichever it is, how do you manage delivering that innovation around the regulation, which is still such a key driver to the financial services and banking markets at the moment? And I'm just going to throw that open to anyone who'd like to.
I think customer experience has to be the prime driver. Innovation for the sake of innovation means nothing. So we have to think of the customer first. Some things might not require change at all. Some things might require severe change. And we have to work with the regulator increasingly to try and amend, for example, the code in this country for digital payments, the code in this country for court cases that depend on digital signatures, right? So we are deficient in certain areas still in this region, in this market, to drive real proper use of digital technology for all transactions. I mean, trade finance, a lot of post-dated checks are still in vogue, right? How do I, in a country where people depend on PDCs the bankers depend on that for loans, landlords for rentals. How do I move to a digital society? So we have to work with the government and regulators and the judicial departments to try and move in the right direction for that. Banks can't alone solve this problem.
No.
So I think to your question, what should drive our future is customer experience.
I think in addition to that, I think client experience driven by digital innovation, and more importantly for this part of the world, culture change is going to make a key difference. I think we should not forego the importance of a culture change in the respective organizations that we come from, because I think we need to all evaluate, is our existing organization forward compatible or not. For example, we did this study last year to look at how many of employees actually use our digital services, how many of them are enabled on mobile, how many of them are enabled on CBOL, how many of them walk into the branches, and some of those results were startling. We would all think that we are a very digital compatible organization. Go back and check how many of your employees use them, how many of your employees are actually going to the branch and doing a fund transfer, and that will tell us whether we are building a forward compatible organization or not. So the first two things will never succeed if the culture of the organization is not conducive to that.
I think we got time.
See, one of the good things,
Customer experience, sorry.
what the good thing which is happening in this country is that the government is leading this initiative. You know, if you look at all the government services, every day you announce like, this service has gone digital. You know, now for your residence permits, they will no longer accept paper applications. Everything has to be E. So the government is very nicely creating an ecosystem where people will embrace it. And if the government is doing it, the legislation is imminent. I mean, it has to follow.
I think customer experience has to really be at the forefront of everything, because the customers so often see digital as a hygiene factor in so many things they do. So the impact, if you want to make an impact on your organization and prioritize your initiatives, it has to be customer experience that leads it. That's very clear.
Okay. Gentlemen, thank you. I think we're now going to open it up for some questions.
So, ladies and gentlemen, this is your time for your voice. If we can have your name, your company, and your question.
Thank you. My name is Chris Q. Smith from the Abu Dhabi Global Market. As you might be able to tell, I come from a UK background. In Europe, the Payment Service Directive will soon mandate open APIs. And some of the banks have fought it, some of them have embraced it. Those that are embracing it are slowly realizing some advantages to it. So what is your strategy with regards to open APIs? Is it something you're considering, or do you see it as a bad thing?
See, as far as the city is concerned, we do believe in open API architecture, and most of our APIs are getting opened up as we speak. I think we opened up around 200 APIs in Singapore, and we are now working horizontally to see how we open up these APIs in other markets, and we do believe that the open API construct is here to stay.
If I can just add, I think two things. One of the ways to work with fintechs is to have an open API. Yeah. So I think if you want to embrace fintech, and if you want to bring about that change, you need to have that structure. That's number one. Number two, I think in today's world, it's not how you keep something to yourself. It's more about competing while collaborating. And I think that's the new ecosystem. So if you have a good idea, the better it gets spread and used is what gives you more value than by having it used by a few people. So I think those parameters will drive that what is happening through regulation will happen because of economic benefit in other markets. But time is the question, when it will happen.
Good afternoon, everyone. My name is Tushar, and I'm representing Intellect Design Arena. I have an interesting observation here while we debated, around the banks and fintechs together. In this space, there is something which is coming up by the retailers as well. Say, for example, Amazon. So Amazon has come up both from the seller side and the buyer side. They already have sellers on board. They have their KYCs. What they're now doing is they're giving them lending. I mean, from an overdraft standpoint or whatever the logic is. So typically speaking, it's between deposits, lending, and transaction, as Sanjay pointed out. My question is that are we not missing them in the space, or are they ones, they could also be the ones, as Subo said, the next guy in town who has a six-pack who enters into the gym while we are still catching up?
See, those people have been around, and if you look at, most of the big retailers, like be it Walmart, be it Marks and Spencer, everybody has, you know, a bank or a finance arm. So that's not new to the banking system per se. Now that it goes more online and there are more, you know, people involved, is not really a threat. I mean, it's something we've been used to dealing with, in my opinion.
I think some of them will test and learn. So Amazon Lending, for example, is relaunching. They had a earlier venture, not this successful, but it will be next one. Alibaba has a lending book of more than $30 billion only in China, and they are now expanding into other markets. So you will see some different trends as we go forward. It's not something that's not going to come.
If I can just add one point, I think what we will see is different aspects of banking getting done differently. What's happening with the Amazon case is both, you know, lending transaction and the borrowing gets embedded in the Amazon product. So I think more and more those things will happen. So the point that I made earlier is banking as we see today will not exist in 5, 10, 15 years. It will evolve and emerge, and many banking transactions will get embedded in a normal economic transaction.
Just to talk to that point, Amazon has also started their physical stores. Right now, what stops them from actually distributing low-value insurance products from these stores, or even going in for mutual funds, right? The SIPs to be done from there. It's all possible. It's not done today, but tomorrow, if you look at it, unless regulators step in and say that there is some kind of a third-party distribution, I see might just be possible in the coming years, being done through these retailers.
Good afternoon. Thanks for the interesting session. I have two quick questions. My name is Satya. I'm from Appian in the UK office. What do you see is the role of the physical currency moving forward? With the entire industry moving towards cryptocurrencies, what do you see in the retail industry as the future of the physical currency, number one? And the second thing I wanted to very quickly ask you about, mobile banking. Mobile was introduced like a couple of decades back. The banking industry is catching up to it now. How does the banking industry in retail ensure that you're up to speed for the next thing that's going to come up? So these are my two questions.
Let me take the second one first.
I'll take the first one.
Okay.
I think clearly this is a very strong cash-based society here. I think we have to, the consumers will adapt. It depends on the speed of take-up of the digitization in this market. And you see now the Nordic countries who probably started their online banking in the early 90s are now moving towards a cashless society. It's taken them 20 odd years to develop. In fact, the Nordic countries, interestingly, because they attacked the digital platform through online, don't have an incentive to move to mobile. Very few people use mobile. If you want to be a fintech attacker in mobile, maybe you look at the Nordic countries. Nobody there is looking at mobile. So now, after 20 odd years of digitization, they're looking at cashless. It'll take a while here. Physical currency will still continue to exist for quite a period. I think the speed of digitization may accelerate in this market.
So let me take the second one. I don't think it's a question of mobile technology and banking technology catching up with each other. I think there's a lot of changes that have happened even in the mobile technology as we speak, and is going to emerge. What has happened is mobile banking as it started was a channel. I will put a thought that actually each of the mobile device that we have is is equal to a branch. There's nothing that you can do in a branch that could not be done in a mobile banking. What's driving this change or the evolution is one, customer adoption. And customer adoption, the two main forces are the convenience versus fear factor. You know, the frauds, his acceptance. So you have to balance the convenience and the fraud factors. But the use of technology, and as I keep saying, my firm belief is that every mobile banking well developed is actually equal to a branch. That's the way I approach banking.
If I could, sorry, if I also come on the second question, but I think that you were also directing it to, what is the next best technology in banking? And I think, as we talked about earlier, I think banks, the way we look at our business, the way we look at our clients, the way we look at our channels has evolved tremendously in the last few years based on the perceived digital threat and the digital challenge. So just the fact that we're embracing digital and have embraced digital, we're launching new initiatives, we're partnering with many fintechs, or at least we're getting to know many fintechs and meeting with them. I think the next new technology is going to come from that. And I think banking, we certainly as executives, we're far more in touch with the threats currently in our industry than perhaps 5 to 10 years ago. And people are acting daily on this. And there's significant initiatives in the UAE banks to look at the challenges and to embrace the next technologies and to be ahead of the market.
I'll make 2 points. One is to Som's point. The mobile phone is more than just a transaction device. It should become, in the future, advisory device as well. And we are currently experimenting with that ourselves with something called face packing, where the relationship manager actually appears on the screen live and talks to you, and actually advises you on the mobile while in a mobile session. Early days, but we're seeing very good adoption by customers, right? The second point I'll make is on all the technology that we're talking about, one key factor, especially for banking, is security. So cyber security has to keep pace, and we see, us bankers here, we don't talk about it all the time, but we do see frauds as well on mobile phones, right? That's happening more and more, and we have to stay ahead of the fraudsters. So one industry that has to develop very, very fast for us to take it to the next level is cyber security and mobile security. And that's something banks can't do themselves, but you have to work with the security companies to try and, make sure we can beat that, because one big fraud attack on mobile phones will obviously shake up the confidence of customers, and we can't afford that to happen. So one thing that should keep us awake at night is the more customers go digital, more we have to worry about security on the cyber space.
I think that's all we have time for.
No, Guy, there's more fun to be had.
We haven't
One
done.
final question.
Wonderful.
Coming up from Kalpita Varian.
I think NBQ, I think all of you all have discussed the challenges in achieving digitalization by 2020, which many banks have stated. And one of the biggest challenges is acceptance of digital signature. If digital signature is not accepted, your lending transactions, even as simple applications like credit card, will not go through. So I have a suggestion, why not the banks take the lead and speak to the government, because government is interested in digitization a lot of services. And another suggestion is to the organizer, why don't you call the government to this particular meet and can have a joint discussion and try to move forward.
Well, just to talk about that, I think most of the banks have actually written to the central bank that they bring in legislations to support acceptance of a digital signature. But at the same time, there is also judiciary which has to play an important role and accept that yes, the digital signature will be accepted. And So did mention that there is an issue about a bounce check. You can easily lodge something out over there. But what happens if you don't accept these checks and there is a direct debit authority, if that fails? So that has to be accepted. It's not just the central bank. I think the judiciary needs to come in. So federal intervention is critical to get this going. And the sooner we get it, the better it is for the industry.
I think there's also a difference between, currently in the UAE, between digitally onboarding a brand new customer and somebody who is already existing, taking further products from you. And we have fantastic technologies in the market. Most of the banks are taking advantage of these technologies, being linked into the Emirates ID system, where you can actually biometrically sign and approve a transaction if you're an existing customer. The next step, which is to onboard digitally a brand new customer, is something that the banks are talking to the central bank about.
Just to specifically answer your question, the digital signature today is recognized by the law. There's nothing which in the law which says the digital signature is not recognized. However, what has not happened is that this has never been tested in a court of law. So unless something gets tested in a court of law, the fear which the banking sector has is that will the judge presiding throw out the case in absence of a wet signature. So that is the only thing which needs to be done, but the law is very much there. Sorry?
Yeah, you're right.
There's an interpretation.
That's what he's saying.
You're right.
It's not recognized.
Yes, you are right. Thank you. The banks already, they are raising through Union Banking Federation for getting the digital transfer, digital signature there. Some banks take the lead and they take the risk. But how many banks disclose this risk to the customer? So digitization is important. Not only channel, as Mr. Sabo mentioned, also the digital platform from the back offices. We should not forget about it. But we as banks, we should raise, as our colleagues mentioned here, to central bank and to the federal to get the law. You don't have a law for your biometric. You don't have a law for your digital signature. Only you have for electronic communication. Thank you.
You want to comment? So, UAE Bank Federation work. There's a lot of work being done by the UAE Federation.
Yeah, I think 2 points I'll make. One is, what does digital signature mean? It means that there is an authority which assigns a digital identity to an individual, and that is used at every point where the digital activity gets done. There are very few countries in the world which have that. However, the second thing is, most banks, even here, get a wet signature and get a terms and condition. Thereafter, it's your digital identity that you present to do the transaction. Say for instance, today, if you withdraw money from ATM and you dispute it, how is it resolved? Because you have already assigned the responsibility to the bank that I will use my ATM card and the PIN to access. That's a digital, but that certification is by the bank to the individual. The certificate that we are talking about is from a central authority to all the members, entities and individuals that is used at multiple places. That I think will really accelerate the digitization, but it does not stop from doing what most banks are doing today, which is you need the first signature as wet and you get the authority from the customer to issue him the digital identity that you use to authenticate him. Plus, as Shubho was just mentioning here, the UBF is working a lot with the central bank and with the ministry to accelerate and to bring a common ecosystem in this space. But let's be clear, there are very few countries in the world which have a digital certificate for an individual.
The other point I'll make is the banks have to take some risks themselves. We can't just depend on the government and the regulators and the judicial system. We have to stick our neck out and say, we will take some small risks over the next 3-4 years while the law catches up. So last month, for example, 50% of our loans were entirely done digitally without any paper. For existing customers, we've taken the call, we will not take any paper. They are based on iPad signatures. So 55% actually loans, all of the loans we did last month were digital. Is there a lot of support? Maybe, maybe not. But we've taken the risk as a bank, we'll take it. How many loans go to court? How many of them will a judge decline? There's a loss amount we can estimate and take that call. As a bank, we'll take that call. So we have to push ourselves.
I think we're now out of time. I'd just like to say thank you to the panel for that very, very insightful discussion. Thank you. Thank you.
Ladies and gentlemen, many thanks to our moderator, Guy Mettrick from Appian. And of course, he was joined by Dinesh from Citibank, Mafadal from Rak Bank, Philip from Abu Dhabi Islamic Bank, Sanjay, Dubai Islamic Bank, Subroto from Mashreq Bank, and Suvo from Emirates NBD. Ladies and gentlemen, a big round of applause and many thanks.